G'day traders, mindset reset. A beautiful sunny morning in southern Canada, out for a run. Today we're talking about asymmetrical risk reward. So I talked about one of the biggest mentors that had a huge impact on me was Peter Brandt. And Peter's the one who basically connected the dots for me in terms of understanding what asymmetrical risk reward is and actually having the trading setups that match that. So I talked about how I'd go, okay, well, you know, if Paul Tudor Jones says he doesn't take anything less that offers him at least 5 times his risk on the trade, and that way, as he says, you can be pretty much, you know, a moron and still make money in the markets if you're trading opportunities that offer a 5-to-1 risk reward. And so most traders think that what that means is putting in a profit target of 5 times your stop loss, and that's asymmetrical risk reward. And that is not asymmetrical risk reward. Asymmetrical risk reward is when you have a trading setup, a geometrical structure, where we talked about rectangles, head and shoulders patterns, ascending, descending triangles on the larger time frames, as Peter Brandt trades weekly, monthly cycles, blocks and breakouts out of those. Classical charting is breakout trading, and those breakouts, when they go, tend to move in range expansions, which is what the turtles tried to identify with their trading system, and participate in large moves at the same time having a tight stop on their entry positions. And when they were in winning trades, they would pyramid into those. And so one of the things that I learned from Peter was that when we have those opportunities that present, I like rectangles, I like ascending and descending triangles, because those show up at the highs and lows of weeks on the larger time frames. And when we get those consolidation patterns for explosive moves, they offer range expansions as profit targets. And so again, talking about levels, timings, behavior of price in the session that you're trading, if you understand those geometrical structures and how they evolve over the 3-day cycles, that's when you have the opportunity to scale into positions that are going to explode for range expansions. And that separates 5-star scalable opportunities from your session scalps when you're waiting for that larger structure to evolve over the 3-day setup. And so when you connect those dots, you realize what asymmetrical risk reward is, especially when you tie in larger timing cycles, 3-week cycles, beginnings of new months, beginning of a new week is a new timing cycle. And so reinforcing that my objective when I come to the screen is to participate in a large explosive move, lock in the money, put it away into my account, and then get off the screen. Because me trading movement and gaps and hunts and whatever all these terms are is not asymmetrical risk reward over the larger time frame. That's not part of, you know, again, I talked about that doesn't even resonate with me. That's a foreign concept. But when you understand the bigger picture, as Peter talks about monthly, weekly charts when he's trading, and when he's in those range expansions, those markets will move successively for 2 or 3 or 4 weeks, maybe even a few months. And some of the turtles, Peter talks about this, 3 or 4 large moves a year, basically is the bulk of his profits for the year. So some of those markets, and this is what the turtles understood, you know, a copper run might go on for months, or a cotton or corn or an index or whatever that was, whatever market went on for that maybe 11-12 month run, and they were pyramid in, they were making huge amounts of money from pyramiding into those markets that did explode, while at the same time cutting and taking several small losses on smaller trades that were stopped out on false breakouts and failed breakouts. So breaking that down into what I connected for myself and put into the playbook was that everything is fractal, and those same movements, those same explosive range expansions, everything occurs the same. And if you understand the Monday to Friday templates and you put that together, that's when you understand what asymmetrical risk reward is. Low of week, high of day, low of week, high of week, high of week, low of week. Those are huge explosive moves. Escalator up, elevator down, escalator down, elevator up. And that's where you have the opportunity to significantly compound your trading account. So asymmetrical risk reward, it's not just a matter of saying I want 5 times my risk on this trade as a profit target. Asymmetrical risk reward is actually having the mechanical trading setup that when it completes the pattern and hits the profit target is actually that asymmetrical risk reward. You have a trade, you have your risk, and you have an explosive 5, 10, maybe 20 to 1 profit target on these when they complete or move through range expansions to hit profit targets, while at the same time being able to extract profits out of the market, scaling in, scaling out, managing your risk the whole while, but being in 90-10 opportunities. So hopefully that makes sense. It doesn't change. Every week's the same. Day 1, day 2, day 3. Day 1, day 2, day 3. Rinse and repeat. Scale it up in size, traders. Have a great day. Get out, stay healthy, stay fit, and may the markets go with you.